A very good afternoon, traders. It's Stu Naupan here, founder of Master the Markets Elite Trades Conference and the Traders Open Day. So today afternoon, we are looking at a trade on cable on the Morning Glory strategy. As I have posted on all the other videos about this strategy, and what we look at is basically price analysis, raw price analysis, no raw any price derivatives. We do not use any price derivatives like MACD, stochastic, RSI, all derived from price. This is raw price alone, traders. So as you can see today, what we are actually looking at, let me just put up my price map for you guys. I've stressed the importance of having a price map for intermediate traders. So what you need to be looking at over here today, what has currently happened, is that it has taken out firstly yesterday's low. Okay, yesterday's low. Now before I even talk about that, I will mention to you something else first. Now the first point at the moment, what I want to mention is that this blue line here, some of you might seen it in some of the videos I've taken, is the open price. Okay, is the open price. So that's the open price. So at the moment, the bar, how it's been formed, that it's 5 pips above the open, as you can see this point here, and you got another 45 pips to the downside. Okay, I'm just going to show that to you at the moment right now. So you got 45 pips over here. All right, you got 45 pips to the downside. So that's what you have. So 45 pips to the downside. So 45, and you got 5 pips to the upside. All right, so that's what is done currently. Now what we are looking to do, if you are just looking to capture range, that's what most professional intraday traders do. They look to capture the range for the day, which is, let's say today the range is 60 pips. Okay, 60 pips. All right, now to make that range of 60 pips, either one of two things can happen. Now follow me on this, because this will be very important for you also to use in any kind of strategy that you do. Do remember that everything I'm saying over here is all pure price. Okay, pure price. So you can make it 60 pips either by going up all the way and making another additional 10 pips here to the 5 pips that's already been formed. That means to say it will take out this bar high here and make another 10 more pips. Okay, so from this bar's high, where this white line is, it makes another 10 more pips, and therefore from the open to that high is 15 pips, and it can then make its 60 pips for the day. Okay, so that's one way that it can form its 60 pips range. Okay, let me draw that once more so that's much more clearer for all of you. So we've got the open here, and the 45 pips remains the same. The 45 pips remains the same, and all I'm saying is that it goes up past the 5 pips and then does another 10 more pips, and it makes 15 pips there, 45 pips to the downside, and then you got your 60 pip range. The second way in which you can form, is through the open being here, 5 pips to the upside, and then what you can now do is you can travel another 10 more pips to the downside. So 5 pips remains the same, and now we can do 55 pips to the downside, and now you've got your 60 pips. So either one of these price routes can happen to make your 60 pip range, and this is very, very important, traders. As traders, you must always weigh out the price route probability. Okay, another way what we talk about this, another way that we say this is basically bar projections, bar projections or price route probabilities. That's what we're doing here, and you must know this. You must know the probabilities towards this. So now you may ask, okay, this is all good and well, Thiru, it makes more sense, but how do we put the probabilities to our side? How do we know that 1 is going to form to a higher probability or 2 is going to form to a higher probability? How do we know that? And that actually today comes from the point that of the previous day's high and low. So yesterday's low was here, right? You can see that, no? Yesterday's low was here. So yesterday there was a bar like that, and today's bar has taken out that previous day's low. You see, this very big green bar is taken out yesterday's low. The probabilities say that from our statistics that we have gathered, look at over here, we have said that there's a 68% chance that your 0.7 ATR or your 60 pip range or whatever that we may say, there's a 70 pip chance, 70% chance, 68%, which is very near to 70%. There's a 70% chance that your 60 pip range or your 0.7 ATR, if you may, your 0.7 ATR or your 60 pip range, there's a 70 pip chance that will form to the bigger range from the open. Bigger range from the open, okay? After it's taken out its previous day's low. So the bigger range from the open right now is this 45 pips, but still doesn't say whether 1 or 2 will form. That's why the next question that we ask the programmer is, that it's got to form its 0.7 ATR, it's got to form its 0.7 ATR or 60 pips towards the bigger range from the open first, and in the direction that it broke its previous day's low or high. So yesterday it took out yesterday's low, that was the direction which was down. So it took out yesterday's low, direction which was down, and we want it to form also a bigger range from the open to the downside, a bigger range from the open to the downside. That's your second criteria. And not only that, not only we want to take out yesterday's low, but also make a bigger range open to the downside, also make it 60 pips to the downside as well. So these are the 3 points. And when you put all those 3 points together, we asked the programmer that question as well. And then the answer for that is that there's a 72% chance of all those bars that make a bigger range of the open, right, just like here, that it will form its 60 pips or 0.7 ATR to the low side, okay, to the low side, okay. That's what we found. So therefore, in this whole summary, what we are saying is that diagram number 2 is a higher probability, where it's going to form its 70 pip range to the downside. All right, so that's what we are saying over here. So in terms of that, that's how, in terms of probabilities, we have formulated our basically our trade over here, as you can see, right? As you can see over here on this trade over here, as you can see, we already triggered in at the moment. As of currently, as of moment, we have already been triggered into this trade, as you can see, currently just going against us. All right, so that's what we do have in terms of that. So we'll see how that goes on for the day. In terms of the positions, we did take also another 2 other positions today as well. Didn't really go in our favor today. So this is our final third position that we'll be taking, and that's pretty much it for today. I will then stop taking any more trades after that. All right. You see, traders, finally I just want to summarize by saying that the only most thing that you can really do is only put the probabilities to your side, and after that it's just running a numbers game. You just keep on taking trades in that fashion. All right, that's all you're doing over here. Okay, I will resume the video very shortly just to see how this trade progresses. Hello traders, as you can see in this trade, we're still in this trade at the moment. You can see that actually where we entered on a limit order over here, trade did go down and then it did stagnate for a bit. It took out a few stops as well, stagnated for 3 hours. This is usually unlikely that it usually stagnates for this long on cable. It's just one of those days, and we have stood through it because technically we were not meant to get out. That's why we followed our plan. Right now, as you can see, it has finally reversed. But I must mention one thing at this particular point, which is what we call time-based studies, okay? Time-based studies. In our time-based studies, what we have found is that cable, especially for this currency, we can put that indicator into any currency as well, any instrument as well we want, any commodities, any index. What we have found according to cable is that usually it would do, let's say for example, this is what you need to find out on yourself, is that it would usually form its 60 pip range or whatever not, right, by 3 p.m. most of its range. After that, the percentage that it gets to its 60 pip range or whatsoever it can be in any example is only by 4%. Only 4 more percent of trades start to formulate this final 60 pip range by 5 p.m. So you must as intraday traders have all the stats next to you as well. After which period of time does the percentage drops to increment drops by very little to formulate a 60 pips or 0.6 ATR or 0.8 ATR, whatever it may not. You must do your research. So according to us, the increment of it forming its range reduces after 3 p.m. Okay, after 3 p.m. So I will be looking to close this trade anytime from 4 to 5 p.m. Okay, because the increment is only like by 1 to 2% that will formulate its range after 3 p.m. So I will get aggressive on my stop, or otherwise I will even look to exit it. So I'll make a discretionary call. So at that particular time I will resume this video and you will see what we have done and how much we have made on this trade. All right, okay, I'm going to pause this video and then we'll see how this trade resumes. Alright traders, so now as you can see, the trade has now moved to the upside and we're out of this trade. We got out at 2984. That's just about 7 pip loss that we took. So as you can see, we really keep our losses really to minimal. Now do remember what I just mentioned to you before, that one of the two routes that you could take, and it did get into the second route, where it has made its range by going towards the stretch. Okay, it's made its range by going towards the stretch. So this diagram didn't happen. Remember, we already mapped out the price route probabilities, and now what it has done is probably this one over here, right? That's what it's done. But still, what you have to observe is that the bigger range is still to the downside, and that's how it has done it. Okay, right, so do look through this video. Really lots of very high content material that for you to learn from. And also just one thing I just want to show, yes, that as you can see, that's our trade over there, 2984, and a small hit what we took in over here, as you can see. Okay, so that's pretty much that. I'll do a total review of all our positions and everything on this Friday, usually now Forex Friday. All right, okay, so do contemplate on whatever that we have taught you in here and see how you can put it all together in terms of your own strategies. I'll be talking more about them as well at Traders Basecamp. All right, you'll be learning much more content like this, much more statistics what we've done, and also all the research that we've backed, so that we can shortcut the journey of any trader who's just starting off or also has been in the trading journey and still not seeing it turn to positive equity curve. Okay, we're all here to help you. All right, so that's all from me for today. And as we always say, stay disciplined, follow your trading plan, and keep trading like a master.